Okay, we have yields rising. Crude oil continuing to jump higher. Crude futures were up 4%, and concerns still about tensions in the Middle East, putting pressure on the market today. Again, we're now moving into earnings season. We're going to be getting some banks at the end of the week. This week we'll start getting of the Wall Street darlings, the inflation data later in the week, along with the FOMC minutes from the last meeting. I think that's on Wednesday, and then Thursday, Friday is the inflation data, CPI followed by the PPI on Friday. Now, the Dow was down almost 400 points. It was down over 500 points there. At the lows, we were down 1%. S&P also down almost 1%, down 55 points, closing back below 5,700. NASDAQ down almost 1.25%, 1.818%. The Russell down 0.89. The VIX jumped by 17, almost 18%. VIX back above the 20 level at 22.64. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the chart, you like the indicators, please let me know that by supporting the channel. It's a lot of time and effort to do this. I show you the charts I look at every single day. If you like the chart, if you like the indicators, let me know that by supporting the channel. I don't have any sponsors, just a direct relationship with you. If you follow the link below, it'll take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. Could take a moment to help out, I would really, really appreciate it. Now, we had a surge in the VIX today. We're up near the upper band here. We'll be watching. Does this start a bigger move? We're continuing to hold above the 50. When you're above the 50, bad things start happening on the S&P 500. 50, if the S&P can rebound, then volatility could still come back down. Buy a little bit more time. We are getting the 10 back above the 20. We're holding above the 50. Stochastics recycling back up towards extreme zone, but you got your MACD positive. You're above 50 on the RSI. So again, if the S&P continues to have volatility, that may be all she wrote. VIX is predicting that in the next two sessions, we will either get a bottom or a bounce. The S&P 500, it may go a whole lot lower before that happens. It's over the next 2 days. That means either Tuesday or Wednesday. Wednesday, we get the Fed minutes. Horizontal support or near it on the S&P, watching to see if we try to get action there once again, or if that level breaks. Do we stay above the 50? Do we drop back below it? Just some things to pay attention to. You might want to watch the video all the way through. I'm going to be talking about these 9-count reversal signals that are setting up. These divergences in the weekly time frame. Dow and the S&P. NASDAQ gets a lower high. Want to watch the video all the way through? Important week. If history repeats itself, we could see peak on the S&P 500 possibly within the next 6 sessions, T-minus 6 sessions. Based on the historical data, again, it is not to make some kind of fake prophecies, hocus pocus nonsense. Out of top, it's putting it together, what's going on right now and what has gone on in the past historically surrounding the Fed cuts, surrounding the coming recession. Talking about these weekly charts in just a moment. Just want to take a moment to say our thoughts and prayers are with the families of the victims of the October 7th attack 1 year ago today. And we pray the hostages that are left are able to survive and eventually be released. Our thoughts and prayers are also with the family of those hostages. Quickly, some things I'm paying attention to here on the NASDAQ. Again, the gap fill. I'll talk a little bit more about this as we're possibly back testing the bull flag. You'll see that chart on the 60-minute chart a little bit later. You'll think we make it up to this level. One thing I'm watching is a possible 13 count forming a lower high. You may recall, got a 9 count back over here. Let me just bring it up. Back over here, we got a 9-9 reversal pattern. That marked the very top, by the way. Got a 9 and we went just slightly higher. These counts show price exhaustion. Here we've got a possible 10 of a 13. We need 3 more bars to be above the bar from 2 bars ago on an intraday basis. 9 counts, it's on a closing basis. We'll be watching to see if we get that pattern should we attempt to recover. If we continue to slide, again, we have this gap back over here and we have this trend line down over here. So just some things to be watching there on NASDAQ. But I'm paying attention to these sequence counts. Here the 10 of the 13 on NASDAQ in the daily time frame. And then on the S&P and the Dow, we have these 9 counts that are starting in the weekly time frame. This is just 9 count. Now, so far, bar 7 on the S&P is the high of the count. In order for this count to be valid, to be a perfected sell signal, bar 8 or 9 has to be the high of the count. And so far, bar 7 is the high of the count. If it is to be perfected this week, bar 9 has to be the high of the count for it to get a perfected sell signal. And then again, that bar can mark an immediate turn, I think is very possible. Or we can go a little bit higher, like same exact count going on the Dow, the 9 count. We had that topping tail on the daily chart. That's this topping tail here in the weekly time frame. Again, bar 7 is the high of the count. We'll see if we exceed it. If it is, if it ends up being a perfected signal, we will exceed it. Bar 9, or if we don't, again, we could still do it. It may be the count doesn't finish. Maybe it gets canceled out if we start selling off. If markets start getting rattled by oil prices with tensions in the Middle East, and we rally and complete this 9 count sell signal here in the weekly time frame on the Dow and the S&P 500. NASDAQ already got it back at the July top, as I've said, at the lower high on NASDAQ. That's what I was talking about. We had peaked on the July 10th bar in the daily time frame with the 9 count here. We got it the week before, went a little bit higher, and then you got your nearly 16% sell-off. We're up to bar 5 here. I don't think we're going to complete the 9 count with this count here. I think we'll get the lower high, fill the gap, and I think that'll be it. I think that the 13.9 already marked the top for the NASDAQ, as I've said. If we fill the gap, we can get that perfected sell signal on the Dow, on the S&P 500 in those weekly time frames. They would be the highs of the counts. Rally further, S&P go to a new all-time high. The Dow moved to a new all-time high, and we get a perfected signal there. Fill the gap on NASDAQ, and then they would diverge. NASDAQ would diverge with the S&P 500 and the Dow. It was one of the reasons why I called a top back in July. I told you we were getting the rally ahead of the trend lines in the weekly time frame, trend lines that I talked about, and moved into July. We got that lighter volume surrounding Independence Day. We ended up getting this topping tail, and I told you, hey, on the 10th, I thought we topped. We sold off by the 12th right here, and this followed. So I think that the top is already in on NASDAQ, but the 9 count is also already completed here. And now I think that the S&P Dow are getting another one. Going to end up giving the S&P this reversal. This is the S&P weekly again, this 9-9 reversal pattern, which is a reversal pattern with the sequence count. So we'll see if it plays out. This all goes into my thinking of why I still think the S&P will make a new all-time high, why I think the rally will continue to fill the gap at 20,400 on the NASDAQ 100. S&P making new all-time highs, leading a top. NASDAQ making a lower high with the July peak, S&P getting a higher high, and they diverge. Live it, love it, learn it. Now on Friday we had 5-minute chart, a little topping tail, a little divergence right here. And these divergences in the 5-minute time frame on the shorter time frames just cause short-term price fluctuations. At times they can cause turning points. The bullish divergence here caused a turning point. This first divergence just gave us a bounce. But we gapped lower, and you always want to watch a gap. When you get a gap, is it a gap and go? Is it a gap and fill? Is it a gap and trap? This was a gap and go. We gapped down on the intraday charts, and we kept going. We went back to fill the gap back over here from last week, with Friday's gap higher, jumping above our 200 period moving average. We've now dropped back below it, and the 50 dropped back below it after that rally. Watching to see if the S&P can make a new all-time high. The NASDAQ try to fill the gap, 20,400. Go back and test the lows. We could see a divergence develop here. We are trying to form a triangle on the 60-minute chart. This is coming back and filling the gap here from Friday, and then we resume the advance, and then we come back and try to fill the gap up here from today. Still risk of the start of a reversal. Again, I've told you what I think. I think we're going to see a new all-time high, because I think NASDAQ's likely to fill that gap at 20,400. We'll see what happens now that we've come back and filled Friday's gap right here, and then we'll be watching. If we end up going lower, watching the lows from last week, watching the gap up here, as I've said. Now, as we've sold off, The S&P is filling the gap as we've sold off. We're forming a triangle. Now, if the triangle doesn't play out here, and it still could not be complete, could still be in its earlier stages here, still more work to be done. But if we drop further and we lose the support, then that could be very bearish. But as I've talked about previously, directly below this level, you do have the gap fill, and you have the 200 period moving average. When we got above it over here with the Fed, the day after the Fed meeting, we cleared this resistance, formed this divergence. We ended up forming this divergence that gave us a pullback. We had an immediate pullback to support, we bounced. We had another pullback to support, we bounced, and then again another test. So again, last week we were testing this level, bouncing, attempting to bounce. We're testing it again, possible triangle. This triangle is coming in right at the 20 period moving average in the daily time frame, the support and resistance line right here, but the 20 period in the daily time frame and the rising trend line excluding the shadow. So keeping this triangle in mind, a triangle can be a continuation or reversal pattern, but if it plays out to be a continuation, again, my objective target level is 5750, which we've already reached that minimum objective target to the 6,000 area. So if it has an upward resolution, again, I'm looking at that upper boundary of the channel line in the weekly time frame. I'm looking at that 5750 area to the 6,000 range. May not make it all the way up to 6,000, but we may attempt to go higher, but still exceed our previous peak in the high 5,700 area. With the sell-off, we saw momentum stall out, at least for now. And again, we've come back to the lower boundary here. And you can see the upper boundary, nice looking triangle there. If we break it, you got your 200, you got your gap fill down here. So it's a gap from back over here when we had the breakout the day after the Fed meeting. We're going sideways right now. So if we can rebound, this triangle could be in play. We'll have to see an upward resolution. If it breaks down here, then watch the 200 period moving average. But here's the daily chart. Look at this. Again, our horizontal support right here, we're testing it again. Our rising trend line, excluding the shadow, well, it's just directly below. And if we include it, maybe we go just a little bit lower, again, towards that 200 period moving average. But again, you got a possible rising wedge. You got a possible triangle in the wedge at key support. Again, I've talked about a possible divergence developing. Still may be that we sell off and then come back up. That's certainly possible. It could be I'm wrong about NASDAQ filling the gap fill at 20,400. If we start seeing signals all begin to turn bearish, remain that way. So again, I'm telling you what I think, but I'm open-minded to other possibilities. I do think a divergence will end up forming right here in this price action, like we had back over here, like we had back over here. See a divergence also develop on the MACD, but the MACD is rolled over. We're selling off. We're going sideways currently in a symmetrical triangle. The 10 is still above the 20, but we're coming down and testing the 20, the trend line, and horizontal support. We'll see if we try to bounce there. We break that level again and then end up breaking this trend line, then that would be bearish. If we bounce off these levels, then that would be bullish. So again, it could be we may try to test that 200 on the 60-minute chart, but again, you got a decent chance you're going to try to bounce here off of these three levels of support: the rising trend line, horizontal support, and our 20 period moving average, the blue line. Momentum flipping back bearish. We tried to get above these 50 period moving averages, try to get above the clouds there, and it's now failing. So we're getting back and forth. That means we're either going sideways or the risk is that we go down. If we're going sideways, we could still have a continuation pattern. But again, momentum flipping back to bearish here, the MACD rolling back over here at the center line and rolling back below it here in the 60-minute time frame. So again, either we're going sideways or we're going down. If we're going sideways, buyers need to come back in to resume the advance. I told you momentum had shifted back up with the jobs report there on Friday, and now it's turning back down here on the 60-minute chart and turning right back down in the daily time frame. Look at this. We got a false move, at least for now. We had flipped the momentum to bearish the previous week. I talked about that. I was looking for a rally with the jobs report. We got it. We got the signals turning back to bullish on 60-minute chart. The 4-hour chart momentum turned back to bullish. The trend didn't turn back to bullish yet. Failed to do that. And then here in the daily time frame, see the little blue arrow followed by that red arrow? Tried to turn back to bullish. We closed above the cloud. Today's sell-off, we closed back below the cloud, again testing our 20-period moving average. Still have red bars. I told you to be watching. Do we get some green bars here and end up forming a divergence? Or do the bars just start going negative, and that's all she wrote, and we start seeing more and more signals turn bearish? And it could play out that way. I told you what I think is going to happen, but there are other possibilities. I have to fill that gap on the NASDAQ. Nvidia was up today, but NASDAQ was down. Again, I still think Nvidia is going to go above the August high, and I think that will help NASDAQ fill the gap. I'll show you the chart in just a second, but again, red arrow, blue arrow, red arrow, just going back and forth, showing we're either going down now or we're going sideways, one or the other. S&P, we saw the momentum line turn bearish. It hasn't turned back to bullish yet. Friday, bullish reversal of conditions for momentum. Showed you it flipped back today. So now the signals are back to bearish. They got to flip back to bullish if we're going to try to go higher. Right now we're kind of going sideways in that triangle. We saw the red arrow here on Thursday with momentum turned back to bullish on Friday, and now struggling. Bars turning red here, reflecting the momentum like we started to get over here. Then they turn back to green. So again, kind of a sideways triangle developing there. The momentum line's got to turn back to bullish. We did get a sell signal here. Trending signals are still hanging in there. The cloud is still green above this line for the cloud right here. We're still seeing the blue here, short-term trend, but the momentum is bearish and we're going sideways, and we're at horizontal support right now, as I've shown you in this video. So we'll be watching to see, do we start breaking down? All kinds of bearish signals show up, or again, do we form the triangle and have a continuation pattern? Do we have momentum go negative here? Or does it go back up and we end up forming a divergence here with momentum and on other indicators like the RSI and the MACD and things like that? Watching the triangle and be watching that 20-period moving average. Does it hold as support? The VIX had a big surge today. Same thing for the NASDAQ. Again, got some warning signs with the top momentum here. The momentum line turned bearish. So on Friday, those bullish reversal of conditions as far as momentum, but now it's flipping back. So again, momentum line here, we've got to see NASDAQ's going to fill the gap. We've got to see signals turn back to bullish as far as momentum. The trend signals, just like the S&P, are still bullish. There's still the possibility, I think, and a probability that we end up forming divergences, but I think that will establish a lower high on NASDAQ just to fill the gap over here, and I think it will establish a new all-time high for the S&P to complete a divergence, and then I think we'll see those divergences in the weekly time frame begin to play out. This could spell trouble if we start breaking key support levels on the S&P 500. If we can get Nvidia helping out NASDAQ, then maybe it fills a gap in Nvidia, goes back and moves above the August high. It did rally today, but NASDAQ did not participate. Again, I'll be watching to see, do divergences develop? Daily chart here of the NASDAQ. Last thing, we've got these gray shaded areas telling us, hey, squeeze move is getting ready to happen. Is that going to be up to fill the gap, or is it going to be down? We'll be watching. Will it be followed by a shorter move like here, or will it be followed by a bigger move like over here? Just some things to be paying attention to. Momentum line still bearish here, and then the bullish reversal of conditions being canceled out today. Again, here on the S&P 500, here on the NASDAQ 100. Look at this again. We saw the close above the clouds. We saw the bullish little arrow. I talked about this over the weekend. Now getting canceled. So we went from bearish to bullish to bearish. That means we're either going sideways or we're now going down, one or the other. We'll be watching. Do these awesome oscillators go negative, or do they end up forming divergences and we start taking out this peak over here to fill the gap back over here at 20,400, and then completing a divergence that gives us a reversal? That's what I still think is likely going to be the case. But if this signal remains and we start taking out the 20, the 50, and we start seeing everything turn back to bearish, then maybe we don't fill that gap. I could be wrong about that, but I have the guts to tell you what I think. But again, the divergences could start playing out in the weekly time frame on the S&P at any time and get a lower high at any time on NASDAQ. I just happen to believe we're going to fill the gap. Still think that. Watch as we go sideways here on NASDAQ and the S&P 500. Daily chart here. NASDAQ 100 was down 1.17% today, down 234 points. We're still watching these weekly charts. I think we'll end up validating a lower high on the NASDAQ. I believe NASDAQ already peaked in July. The S&P is about to complete these divergences. We have triple negative divergence on these indicators. Could be that it's already now starting. Guesses we're going to go a little bit higher. We've got a potential 9 count in the weekly time frame that could complete this week. S&P weekly chart here. I just want to show you the Dow. Same thing here. Again, the Dow could still move up a little bit higher. We could get another divergence with the transports. So we've already had a divergence develop. Again, you've got the same divergence going on with the MACD and the awesome oscillator here. We're now starting to see the stochastics weaken here with the Dow. So again, could be all she wrote. We'll see what happens. But like the S&P, again, I think you can form these divergences on the awesome oscillators, maybe the MACDs, but you're doing the same thing here on the Dow as you did on the S&P 500. And again, going from bearish to bullish on Friday there. Thursday we went bearish, Friday we went bullish, and now back to bearish. So again, this is showing us we're going sideways or down now. So we'll see what happens. Major multiple point negative divergences on the RSI, this big divergence here on the MACD. Maybe it's done. So we'll see what happens. Or do we buy a little bit more time? But it's forming a 9 count sell signal in the weekly time frame. We'll see if it completes or not. It could still be. We don't have the 9 count as the high, but still complete the count as long as we don't drop below the bar from 4 bars ago. Do we buy a little bit more time before the week ends? But these divergences are eventually going to play out, and probably we'll see a peak here, or if we haven't already had it, from the previous 2-week bar there, previous high. Look at the transports in the lower window, and we look at the Dow in the upper window. We're moving slightly lower in the transports. Well, the Dow moves slightly lower too, so there's really no divergence between the two at this point. Bullish one, but a doji candle of indecision today on the transports. If we rise back up, we get another lower high. Could see the Dow try to push up and get a slightly higher high than the previous topping tail that formed over here, and they could form another divergence. That's certainly possible. Just start doing technical damage and seeing more and more sell signals, then maybe that's all she wrote with the topping tail there on the Dow. We'll see. The Dow does peak before the S&P 500. We'll be watching to see if that might be the case. So far, this divergence, this bearish divergence right here, has given us a sell-off in October. So we'll be watching if it continues or whether we attempt a recovery. What's really interesting is, well, the S&P is coming back and testing horizontal support, possibly forming a triangle. We're getting a throwback on NASDAQ to the breakout of the bullish falling wedge that I talked about. We broke out of that on Friday, and we're back testing. So again, can signals turn back to bullish and resume the advance and fill this gap up here, and we complete the wave C? I'm looking for an A, B, C move here, which I think is going to be likely the case. Or does this move fail? Again, we're pulling back here, and again, it may not be done yet. We can come back closer to the trend line, but we're throwing back towards it right now. So again, I'll be watching. And again, you have this lower boundary right here that we're coming up to right here. We're just directly above it ever so slightly. So again, could the bullish falling wedge be evolving into a triangle? So we'll see what happens here. Again, MACD rolling over here right at the center line. So again, dropping back below the 50 period after we got back above it there on Friday. So we'll be watching, can we get the traction back up? Again, I still believe we're going to fill this gap. But again, momentum turning back to bearish there with the reversal of conditions. For the momentum lines in the daily time frame have not been able to turn back to bullish. Saw 60-minute charts try to turn back to bullish. MACD getting in positive territory, getting back above the 50 here on the 60-minute charts, but then turning back down. So possible back test, throwback towards a breakout of the bull flag pattern. So we'll see what becomes of that. And if this pattern fails, if we start breaking down further, you've got these 200 periods, you got the gap filled down over here. Again, we would do more technical damage if that were the case. There's risk of reversal. My guess is Nvidia is going to move above the August high, and I think NASDAQ is going to fill this gap. Nvidia had a rally today, 2.25%. It moved up to just under this August high over here. And again, NASDAQ's already moved above the August high. I think Nvidia is going to come up here a little bit higher, and then I think it's going to turn, and I think it's going to complete the ABC move. And I think when it moves a little bit higher here, again, I think it will get a lower high, lower than the peak over here in June, and I think it will allow the S&P to fill that gap. So I'm watching Nvidia closely. I think it will allow NASDAQ to fill the gap. This volatility with NASDAQ as we reached extremes with momentum, that could be all she wrote, possible. Above the 20 period, we're back below the 10 after getting above it on Friday, but again, still possible divergence develops here, much like what we had back over here. I still am of the opinion we're going to fill the gap. A big surge in the VIX today, so again, talked about the other possibilities. My guess is we're still going to end up filling that gap. On the NASDAQ, I think that would take the S&P to one final high, one more new all-time high at the upper boundary of its rising wedge there, and the upper boundary of the channel in the weekly time frame that I've talked about. And again, here's that rising wedge. So again, we'll be watching. Again, even if we blow past this level, do we, just hit this trend line and get a bottoming tail and then rebound back up? We'll see. But we could still reach this upper boundary. If Nvidia helps NASDAQ, could see the S&P still do that. Could still see a divergence develop on the RSI. Right now we have a lower high here, lower high with price, lower high on the RSI. We'll see if a divergence ends up developing. But this is the upper boundary that I'm looking at here for a possible price target if momentum can continue. I guess as S&P is going to try to make it up to this upper boundary of this trend line right here of our channel. Possible 9 count on the S&P this week. So I think that's what's going to happen. If it starts to turn, maybe that's all she wrote if signals all start turning bearish, but I still think we buy a little bit more time. Again, you've got this triple divergence here that may not be done yet. Guesses it's not, but again, if I am wrong, more and more signals are going to turn bearish. Now, we're having a rally on Friday that has failed so far. It is backtesting horizontal support on the S&P 500 and backtesting the breakout of the bull flag on the 60-minute chart on NASDAQ. If we have successful backtests. Again, triple divergence developing on indicators. May not be done yet. Again, it may be like right here. We turn down, we turn back up. Then we got the drop. Could see something like that right here if we want to go up a little bit higher. And we may even overthrow the trend line. I've excluded the shadows. May include the shadows, or we may even overthrow it a little bit. Again, my target level is 5750 to 6000. The upper boundary lines on those monthly charts that I've been talking about as well, in that same neighborhood as the trend line here in the weekly time frame. Know that we make it to 6,000, but we still make it up here and complete these divergences. We're done already. Then we're going to need to see evidence of that, a bigger sell-off and more technical damage being done. By the way, the S&P has the same possibility, a divergence that could end up developing here, momentum and on the RSI and other indicators, MACD and so forth, so on and so forth. You can see these divergences on the indicators. Again, it says it's not quite done yet. Could be. And again, we're looking for clues. Looking at a timeline as far as the previous first rate cuts, 19 days, 17 days. We're on day 13. 13 sessions after the Fed's first initial cut here in 2024. So again, my guess is we're going to try to rally up. Doesn't mean I'm going to be right about it, but I'm just telling you what I think. But you can see these divergences as well as I can. That's telling you the time is short. Again, the other first initial cuts, we had rallies. They were terminated. One resumed the crash after it had already begun. It was a counter trend. The other one hit a top, and it was followed by a crash. So again, we'll see if we get something similar to that here. And we're not using that. We're using it as a guideline. We're not using it to magically read the future. I mean, we can say, hey, we got divergences, mathematically based indicators telling us, hey, something's getting ready to happen here. Trend lines and so forth. And we can look at things educated decisions. But again, some hocus pocus nonsense. We're trying to look at the rate cuts as a guideline. I told you the rate pause is bullish, the rate cuts are bearish because recession is coming. So here the RSI, we've got the divergence going on. Maybe it's done. Maybe we buy a little bit more time. My guess is we buy a little bit more time because I'm looking at that gap on the NASDAQ, and I think Nvidia is still going to go higher above the August high. I think we're going to go slam up into this level. I think we're going to go slam into the upper boundary of the rising wedge, and again, they intersect in this area. Maybe we overthrow this level, but again, this is the area that I'm looking at between 5750, which we've already reached, to the 6,000 area. If we overthrow this level just a bit, you've got this divergence, really nice looking divergence here. There's so much complacency. Being told, oh, the jobs report, oh, it came in strong. Numbers that have constantly been revised downward. How are we to believe those numbers? I predicted we get a strong jobs report. I thought we'd rally with the jobs report. Now being told, the report is showing that we're not going to move into recession. We're going to have a soft landing. And again, a soft landing based off fake numbers. I don't think so. So the $64,000 question is, are the divergences now done and we're starting a reversal, or do we buy a little bit more time? Again, tensions in the Middle East the market has a potential to rattle the market, and could see a surge in energy prices. We saw that today. That created some volatility along with the rising yields. If we see Israel respond to Iran's missile attack at some point this week, then all bets are off. That could rattle markets. There's a delay. Could buy more time. Probably something that will end up rattling markets. Concerns about energy prices, concerns about a regional war. So just things to be paying attention to right now, along with the upcoming earnings, the economic data, inflation data here later this week, and the FOMC minutes.